On this episode of Impact Sauced, I'm joined by Gary Woodhead and Joey Jones, the visionary founders of CurveBlock. Together with their third co-founder, they form a powerful trio in the impact space on a mission to revolutionize real estate development by harnessing digital technology to drive financial inclusion and create meaningful financial, social, and environmental change, hopefully one day on a global scale. We talked about the importance of financial inclusion, of course, which remains one of the root causes of poverty worldwide. One of the most impactful solutions, expanding societal participation in real estate development financial products, opening the doors to everyday individuals alongside traditional players like banks and financial institutions. Innovation in the digital security space will be a cornerstone of this democratized financial ecosystem. However, this innovation faces significant challenges as regulatory frameworks struggle to keep pace with rapidly evolving technologies like blockchain and instant transactions, creating a gap between innovation and implementation. Key takeaway from our conversation: at its core, financial inclusion is more than just a social imperative. It's a solution to energy poverty. By democratizing access to investment opportunities and sustainable technologies, we can create a more equitable and energy secure future for all. Tune in to hear more about Gary and Joey's groundbreaking work with CurveBlock and their vision for a more inclusive and sustainable world. Let's get started.
It was a hard year, a heck of a lot of difficult milestones, but the end of the last day of 2024, Christmas Eve, we had an amazing thing happen on the water neutrality side of the business. And the first week back, we closed the seed round. So no more kissing frogs.
Okay, good. I'm really pleased to hear that. And I want to talk about this new initiative that you just mentioned in a minute, Gary.
Yep.
But I want to start off by you guys telling me how you met.
Yeah, it was an interesting time back then at the concept. Myself and Joey were both obviously passionate about the digital space and innovation. And there was nobody out there that understood the emerging market that was coming. And it was basically through posts and various activities on LinkedIn that we met, kind of chatted back and forth. We both completely understood what we were both talking about, which virtually everybody else didn't. So we kind of went from just chatting on LinkedIn to virtual meetings and discussing the space of digital innovation, digital securities, regulated landscapes. And in a nutshell, off the back of those interactions, ultimately, we became co-founders with the mammoth task of trying to get a new form of financial innovation to market that the regulators wouldn't allow. So LinkedIn, of all places.
Yeah, and hence the birth of CurveBlock. And I know when you guys approached me, the conversation was around the opportunities in the digital market space. And I know innovation is a massive driving force behind a lot of impact ventures. But actually, Gary, now I want to talk about the innovation side of things in a minute, but I felt the driving force behind everything that you were doing was centered around this concept of democratization.
Yep.
What personal experiences actually turning point sparked your passion for that in particular, and then how that actually then shaped your journey into the world of venture-backed innovation?
Yep. Okay. It all started by being a hobbyist investor, looking at startups in the digital space, who's doing what. And at that time, I'd been in construction for about 25 years. And I naturally orientated to looking at the startups in construction in the digital space. And predominantly they were all going the crypto route, kind of down with the regulators, down with the banks. And I couldn't see a startup globally that was democratizing the construction sector, i.e. the mechanisms of finance that underpin construction, which is known as debt. So most construction projects, you know, small and large, are predominantly bank funded with what's known as senior debt. You know, the banks lend the money, they charge a coupon of interest. They take first charge on the asset. The thing is built, the banks are repaid. The banks make a killing. They make an absolute killing. It's their bread and butter.
Yeah, don't we know it?
And I couldn't personally find startups or scale-ups that were democratizing the debt. There was hundreds of them out there, but they were all democratizing the asset. So they were basically saying, let's buy a tower block in New York and we'll create 10 million bricks. And for every brick you own part of the building, and we divide the rent between the bricks. So like a REIT, a real estate investment trust, which that's fine. It is democratization to a sense, but that's not where the wealth is made. The wealth in real estate is made through construction. And having been in the market for, you know, decades and understanding the financial metrics that underpin the sector, the primary thought, concept was, what if we could just fractionalize the debt market? Let society be the debt, whether it's somebody with £10 or £10,000, and we use a centralized exchange. So think Coinbase, but without the crypto and with the regulation. So it's a digital platform that onboards and offboards from traditional fiat currencies to the digital space, and go the model where society ultimately replaces the banks. And where we differentiate is we share all the profits 50-50 with us and our users. Democratization, to get adoption, you've got to look at this not through founders' eyes, but through the user's eyes. And people don't have the time, they don't have the skill set, they don't have stacks of cash. So we need a solution where you can register, you can onboard, 10-15 minute process, fill out the relevant questionnaires, etc., for the regulators, the KYC, etc., and that's it, you're done. So it's something that people can have financial inclusion. They don't need to pick projects. It works like a fund. So if they're on the platform for 10 years, 20 years, 30 years, everything we build and sell, they are included in the profits. So now you've got a solution for the masses to basically partaking that doesn't require time, skill set, and cash. And you tell me why a nurse, a cleaner, a factory worker doesn't have the same rights as what high net worths do in real estate construction funds. The problem was the regulators wouldn't allow it. So that was probably the hardest part of the entire roadmap. Was we have a solution. It could be regulated. It brings transparency, but more importantly, it allows the 99% club to do what the 1% club do. And yeah, so that was basically the metrics behind it. Change the debt market from banks to society, make it simplistic, get it regulated, and take it globally.
Yeah, absolutely. And I think it's such an obvious way of tackling a problem. So like you said, it's surprising that no one had ever come up with it, but obviously there were barriers in place from a regulatory perspective, which we're going to come to in a minute. But as an idea, I think it embodies what sustainability and impact's all about. You're balancing innovation with practicality. You're not just building a product that's accessible and impactful, you're actually addressing a real world problem, not just a national problem. And it's a model that you could take anywhere in the world, really. So it's not just innovation, it's the impact behind it. I think that's really remarkable about what you were trying to do. And then, Joey, you and I worked really closely together to set up CurveBlock Real Estate Fund and raise capital for these carbon neutral developments. And we had to kind of go out and sort of look towards doing that and building a reputation and getting a few projects under our belt through the professional investor market. But that's been a road that hasn't been that easy to navigate. So what, in your view, Joey, has been the most surprising challenge or challenges that you faced in terms of aligning your ambitions with the realities of the market?
It's an interesting question. I guess what was surprising to me on one hand and not surprising on the other is that what it seems to me is that all of these, as you know, because it's your space, all of these big funds have some type of ESG mandate. They all have a sustainability mandate, although the sustainability is all under this ESG thing, which creates politicization of the objective instead of undermining it, underpinning it with something actually impactful and purposeful. All of these companies are still trying to figure out what that is and how they align. Most of them, if not all of them, are trying to make what they already do fit into that category instead of finding the things that actually fit. And because their objective isn't truly impact, but to abide by these new regulations called ESG, it muddies the waters, if you will, for trying to get something actually accomplished. So you present them with something that's new to them that actually meets the requirements that they say that they have, and it kind of confuses them because they want what they already have to fit the model, not something new. They don't want to go out and figure something else out. They just want everything that they're already doing to fit this and be able to say we're already doing that and we've been doing it. Exactly that. Yeah. They don't really want to find the solutions that really do that because it's not something that's a core value for them. It's something that now this is a mandate we've been given, so we have to figure out how to do it and how to make the things we're already doing do it, as opposed to this is important to us. Let's really make a difference. Yeah, from the regulatory side, the challenge was there, as I know you know, Sima, but a lot of people don't know that REITs have been around for forever. But by definition and by regulation, a REIT is simply mortgages, leases, and rents. So you're always tied to whatever that mortgage or lease is, meaning that you're at an 8 to 12% return annually, which is certainly nothing to complain about or be upset about. That's a good positive return, but that's not a growth return. That's a sustainable return that keeps your portfolio going. It keeps you ahead of inflation a bit, but it doesn't really grow your portfolio per se. And that's where the development comes in. All the real estate projects out there are around crowdfunding, meaning again you're lending money, but you're only getting an interest, so it's more like a REIT, but yet it's one-off investments. So it goes back to that whole, you have to have enough knowledge to do your own due diligence and figure out which project do I invest in and which one do I not, which most people don't have, which is why crowdfunding has never really taken off. But historically, regulators, all of them, have excluded regular people on the street, those of us who are non-professional retail investors, from being able to invest in real estate development as an asset class, the construction sector. They say that's to protect us. I don't buy that. I think that's to protect them and to protect the big boys with money, not really to protect us. So in designing the product, and it didn't start this way, we had to evolve as we thought through this, but really trying to reduce the risk as far as the regulator is concerned to the end user, because their two primary concerns are going to be risk to the consumer. At least that's what they claim is their concern, is risk to the consumer and risk to the overall market. Those are their two big issues. And so figuring out how do you design a product that minimizes all of that to get them comfortable. We still have the piece that they don't allow for retail investors in this space. We did get regulation change so that they see what we're doing in this digital fund as a digital security now, as opposed to crypto, because crypto is still a four-letter word for them. They're trying to get comfortable with it, but they're not there yet. And that's where this whole DSS came from. I
think as a founder, it's hard enough to navigate just the kind of regular conventional things that you need to bring your venture together, let alone a landscape that's just riddled with all sorts of regulations and roadblocks and guidelines and do's and don'ts, and it's really difficult. And I think I want to talk about the work that you've been doing in the digital sandbox space in a minute, but just kind of touch on what you said. And you could argue that from a consumer risk perspective, this is not the first time the regulators had to tackle a particular product that has been risky to consumers. And you could argue that there's loads of other financial products out there that are much more riskier. And actually, at least with real estate development, you could be really upfront about what the risks are. Some of the other financial products out there, frankly, are just a gamble.
And that was my view when Gary and I talked about this, and I said I think I can get the regulation changed. The view was they currently allow betting. You can gamble your entire paycheck away on a weekend, and that's acceptable. Or you can go invest in crowdfunding, where you have to have knowledge and understand the market and invest in these things. And yet, what's on the crowdfunding websites are the developers that can't get funding from a bank. So they're C and D developers that already have problems raising money for their developments, and yet we're going to lend them money. Well, if a bank won't give them money, you probably don't want to give them money either. So those aren't the best things to invest in. Yet both of those things were already approved and regulated and out there in the market. So what we're doing is far less risky, if you will, for the end consumer, because we've diversified their portfolio by having it be a fund instead of a one-off investment. And we've allowed them to do it on a smaller basis at 10 or 20 quid a pop. They can trade between themselves on our own platform. So there's some liquidity that doesn't exist in real estate, potential liquidity. We're not guaranteeing that liquidity because it is a real estate fund. So it's a closed end as opposed to an open end, meaning open end is like traditional mutual funds where people can sell and the fund is required to buy anytime somebody's selling. So you don't want that in real estate. So it's closed in, but it's just minimizing all of those risks, making, in my view, what we're doing much less risky than obviously betting or doing even crowdfunding. That's why I thought that was it. That's right. That's right. Well, it's a traditional model, really. It's a limited partnership, just with a whole lot more partners.
Yeah, and hybrid in the sense that it's not an open-ended fund, but it's not closed-ended in the sense that, like Hotel California, I'm sure you can't get out. So I know you've been doing a lot of work in the space around sort of talking to politicians and other leaders in the FS regulatory space, try and influence public policy. Tell us a little bit more about the digital sandbox consultation and your input on that, and how you feel that's getting you a step closer, slowly but surely, towards your ambitions.
Yeah, the challenge that the regulators have, from my perspective, is that they just don't understand the technology. And while they will all say that they're technology neutral, it's not really true. They're terrified of the technology, and that's why they haven't appropriately regulated it yet. The technology being blockchain and the means that does for instantaneous transactions and all these kinds of things. And so what we're doing is reducing the number of people involved in the process, making it all a digital process, all on the blockchain. But that's still confusing and scary to regulators because they don't understand it. So the DSS, to me, is that first step in the process of being able to regulate the overall space. It's an opportunity for us as a company and others to kind of hold the hand of the regulator, if you will, and say, here's how it works. Don't worry, pat him on the back. It's going to be fine. This makes it easier for you. You have actually now visibility from the start to the finish of this transaction, so it's easier for you to see and to regulate, and you have almost instantaneous reporting as opposed to monthly reporting. Everything becomes easier for you as long as you understand how to read the transaction and see the reporting. And so this will impact the overall crypto industry because they get comfortable with the tools, with the underlying technology. But they had to get to the point where, okay, we recognize that this is a share with a new format. So when they talk about shares being digital, that's nothing new. That's been around for a very long time. The difference is now we're pushing the benefit of that digital from the wirehouse, the Morgan Stanleys and JP Morgans and the BlackRocks and the big boys, the big banks, down to the end user, and we get to benefit from it because we can have a piece of a share as opposed to the whole share, and we have the benefit of that, not the big bank being able to sell fractionalized shares to multiple people, which they've given the ability to do. It's still a challenge because we have capital requirements and all those things that banks no longer have. Banks' capital requirements have gone to zero during the pandemic. That shouldn't be the case. That's terrifying for anybody that holds money in a bank, because there is no reserve. We have become the reserve as people that money in the bank. That the first place that the bank goes to get money when they have a problem is our accounts. And we went from being a debtor to the bank to now we no longer have that. They own the money once we put it in the bank. And we have a right to it, but they have first right. It's like in construction where a bank takes first charge of the asset. Well, they have first charge of our money.
I want to come back to talk a bit more about some of the projects that you guys have been involved in whilst working on this venture in the background. Joey, a lot of people are criticizing Trump's administration because of their stance on ESG initiatives and the energy space in particular. And when you and I have spoken, I've always got the impression that sustainability is a hot topic. But I've also got the impression, and understandably, that a lot of Republican Americans actually would rather set and follow their own standard. And for what it's worth, I do think it is important to have a degree of autonomy, because when it comes to local requirements, only local people really understand their needs. And yes, international global standards are important, but when you're talking about social impact, everyone always says, go and talk to the people on the ground. They're the ones who are mostly effective. They're the ones whose voices you should be listening to. And I think when it comes to environmental impact, for me, that same logic also applies. So you have to find a little bit of a happy medium, a little bit of a balanced view around it. So that's been my impression, and that's been my take on it for what it's worth. I know that even this became a hot topic when you guys first approached me 3 years ago. You told me that carbon neutral buildings had been around in Texas for decades. So I guess my question to you is, do you think the criticisms being leveled at the current administrations are fair? And what do you think have been the biggest differences between the UK and the US when it comes to impactful ventures in both the social and or environmental space? I think people need to hear it. We need to stop reading mainstream media posts, and we need to hear it from someone on the ground.
Well, Trump's a businessman. He's not a politician. So he's going to look at everything from what's going to be economically beneficial to the U.S. And so he's going to move away from anything that is ideological that doesn't have a real impact. Now, interestingly, there was just a lawsuit that was finalized 2 or 3 weeks ago, and I don't know if you saw it or not, but the pension holders from American Airlines sued American Airlines for the way that they have managed the pension fund because they hired BlackRock to do an ESG mandate on their pension fund and they lost money. They won in court for a violation of fiduciary responsibility. That has been ignored when people talk about ESG. ESG has been around for years. It's been around for probably 20 years, and historically, it has lagged the traditional markets in returns by about 20%. In the time that this American Airlines lawsuit looked at, it lagged the traditional markets by 10%. But as I've been in the investment world for a very long time, and fiduciary responsibility is supposed to be at the top of your concerns. That's always what you're supposed to consider, is that you always have to do what's in the best interest for the returns of your client. That's what fiduciary responsibility is. Currently, the EU and the UK are both at loggerheads with that particular mandate. They still have a fiduciary responsibility mandate, but now they're trying to enforce an ESG mandate that historically has not kept up with the returns of the traditional markets. So you have to consider both. In anytime you try to pull your eggs all out of one basket and throw them all into another basket overnight, you're going to create problems. The whole idea around this green initiative that was pushed here was let's move to all green energy, and we have to cut off all of the historical energy. Well, if you look at the way this operates, petroleum, oil, and gas is required to create the green energy. You can't create green energy without it. It's required. From the components that are built, that are come out of plastics that come from oil, to the gas that's required for the vehicles, to mine all the things that are required to make all this stuff. They can't be separated. In Texas, 2 years ago, or 3 years ago now, I guess maybe, we had a really bad ice storm that had never happened before in Texas. Texas has its own energy grid. It's the only state in the U.S. that has its own energy grid. And we had this big ice storm that went all the way to Mexico, to the tip of Texas, which had never happened in history. Texas has 25% of its grid that comes from green energy, solar and wind. There's tons of it. There's wind energy not too far from me. All of it froze. None of it could produce any energy for 2 weeks. And so 25% of our grid is already gone for other mismanagement reasons. It was there. And so all of a sudden, Texas has a huge energy problem because they're reliant on green energy and they haven't managed the infrastructure properly. Green energy, while some of it may be a good solution, it can't be siloed. To me, solar, the best place to use solar is on projects like this, or on homes like this, not out in fields where you're taking up land that could be used for other things, growing food or growing animals or whatever the case may be.
Absolutely. Which solves a carbon problem as well. Yeah, absolutely.
Well, the people that are talking about green energy want to tell us that animals out on land is bad for us. That's actually not true, because on healthy ground, you create carbon sequestration, and it becomes carbon positive, not carbon negative. It's holding carbon in the ground far more than it would if it was not good ground. If you've covered it over with concrete, or if you've, whatever the case may be, or if it's hard impacted ground that doesn't have any animal impact, it can no longer sequester carbon. So it creates a problem. Healthy ground that you run animals on is excellent and required for the environment, so that we can sequester carbon and it can be released when it's needed and used by the plants and all the things that need the carbon. The world cannot operate without carbon. It has to have carbon. We can't grow food without it. So to get rid of it doesn't make any sense. We have to have it. And so is he doing the right thing? Well, he's not saying we shouldn't do things to improve the environment or make things better. But for instance, we had Greenpeace for years and years and years that were always worried about the whales, and they're out there, with water cannons and doing all these things to try to stop the oil tankers and all this stuff because it's harming whales and all these things. But yet in the US, when we had mammals dying by the hundreds because of the way that they're mapping the bottom of the ocean floor to create these wind farms, where was Greenpeace? You didn't hear a peep out of them, and yet we had animals dying by the hundreds coming up on the shore, whales
there
and
were
dolphins
washing up on shore. It's absolutely
whales too.
heartbreaking. Yeah.
There were
Ocean
all kinds of
Integrity do a lot of work in that space. And do you know what? I'm so glad, and thank you for sharing that and being really open. I think for some reason people don't like to have open conversation and debate, and you don't necessarily have to agree with each other. But I think the worst thing that you could do, especially in the impact space, and this is one of the things that my first guest on the podcast said, and he's an ESG expert, he's a sustainability engineer, was that existing in bubbles is the worst thing that you can do when other people's views become irrelevant, and you do the whole cancel culture and the whole silent treatment, and you demonize people because of their perspective. But listening to you, I'm hearing three things. I'm hearing you obviously care about social and environmental issues, because if you didn't, you wouldn't have invested the last 5 years in CurveBlock. Longer than 5 years, even since 2018, and it has not been easy. I know I've been part of that journey with you guys, and I really respect the time and effort you put into this. When you could just be doing a 9 to 5. The second thing is that yes, fiduciary duty is key to anything like that, but that shouldn't conflict with ESG. Actually, if you're performing your fiduciary duty properly, it should be an integral part of that. And the third thing I'm hearing is that actually whatever kind of venture you're involved in, and particularly when we talk about it in the context of energy supply, having a framework as a reference point to your operations on the ground where you do consider the wider impact of what you're doing should apply regardless of whether you're in the renewable energy space or you're in the conventional hydrocarbon space. I know that some of what you've said is not going to be popular with some people who listen to this, but I think that we need to talk, and we need to open our minds, and we need to have healthy debate that's backed by real science and real facts, and we need to be realistic about our options. So yeah. I'm putting it out there.
What is interesting, Joey's always said this, which it does make me chuckle, but he's right. What CurveBlock is, ESG wants to be.
Agreed.
Now, yes, it's good that we can have these stamps, these global stamps of what people talk about regarding sustainability. Yes, obviously, you have to look after your environment. Otherwise, your species is ultimately dead. But the bigger picture is these changes have to come, because the poverty line, the bar is getting higher and higher. The cost of living.
Yeah.
People with inflation and the Western world, most people cannot afford to live.
Yeah.
We're seeing houses where their utility bills are the same price as the mortgages, which is absolutely how on earth do you get by when you look at the average salary, whether it's in the UK, whether it's in America. The average working salary no longer covers basic overheads. So we're seeing poverty come from fossil fuel energy. We're seeing poverty come from the lack of financial inclusion. The interest that are paid on savings accounts is an absolute joke when you look at the profits that the banks make on the coupon that they charge on the senior debt.
Yeah.
So this innovation, it's possibly one of the only solutions for society.
Yeah.
And I truly hope one day at scale, maybe not my time, maybe my children's time, that this is the financial model for all business. And the banks are no longer the powerhouses. It's innovation and it's society collectively.
Yeah.
And what's even more hilarious on the renewables, it is actually cheaper to integrate materials into a building that generate renewable energy than it is traditional non-renewables material. So to give you an example, you walk into any major city and you see these hotels and they're in purple, green, blue and red, all these different facades. You can actually have them in sheet black inlay photovoltaic, producing energy, saving money, cheaper than the rain screen claddings that traditional construction uses. So not only is it impactful for society, for the planet, it's actually more commercially viable to go this route, because the market is, you know, some of these technologies have been around for 40 years and they've become commoditized. So what used to be, you had a few people to choose from, it was very expensive and it was very poor performing. It's now a commoditized sector. It's just about price and availability. And every year the technology gets better and the product gets cheaper.
Yeah.
So we're now in this, as I've often said, as Joey's often said, it will be a matter of just years now where all new construction has the ability to be energy positive. Yes, you can argue things like a care home or a hospital would be very difficult because of the draw of energy and the amount of people. But generalized commercial and residential buildings will be self-sufficient. And, you know, again, it goes back to the poverty line. You look at what people are having to pay for energy, it's just disgraceful.
Yeah.
So we need society needs financial inclusion. Society needs solutions to energy poverty.
You're offering a product that is, for me, the embodiment of impact. It's backed by innovative solutions, technology, a digital space that everyone should be able to use. Is very user friendly. I mean, that's how it is nowadays. It's tackling a social issue and it's tackling an environmental issue. And you do not need to be told how to do it in order for you to come up with that standard and be able, the proof is in the pudding. And this is why I champion what you guys do, and why I was very happy to have you as one of my first clients when I moved into freelance lawyering. And I get a really clear view of your long-term vision and the impact that you want to have on environment and society. And I think it's a really noble cause. And yeah, you'll be the first to get on it, not before long. In the meantime, I know that we're doing a little bit of work at the moment in the background for your short to medium term strategy to keep things ticking. The low hanging fruit JVs. Can you tell us about one or two projects, Gary, that you're working on at the moment in that impact space that's particularly exciting for you?
Yeah, absolutely. I'll tell you the one where we kind of put everything on the line, and then I'll tell you the one that came from the cap table. We were prototyping an energy positive house for a connection of ours, kind of proving
the one in
the model.
Wales?
The one in the southeast.
Okay.
Oh,
that one there,
that one.
behind
Yeah.
you, Joey. Yes.
So we were prototyping that, and we were kind of out there hustling, speaking to landowners, who's up for joint ventures. We can do solar carports, we can do buildings, and a certain landowner actually owned a golf course that had planning permission for holiday lodges, and the lady said, could you do 14 energy positive holiday lodges? So we kind of went back to the drawing board, and did the calculations with regards to the integrations. Can we make it energy positive? And yes, we could. So we basically, yeah, the way you can see the interior design behind Joey. So we basically thought, okay, let's try and do this. So I owned one thing in my entire life, which was a small rental property. So I sold that property, gave all the money for the prototype, took the prototype to a holiday park in North Wales and got absolutely zero interest because it's sat in a holiday park that's got those traditional static baked bean tins in.
Yeah,
that you see, yeah. So we took it there.
Yeah.
Yeah, North Wales. But we were introduced through one of the team to a landowner. I won't name his name for privacy reasons, but a significant landowner from Scotland that had already had a pre-application approval for a lodge park. But he didn't want to go down the whole Butlins Haven route. It's an 80s outdated holiday model.
Agreed.
So we took him to see the prototype, and 6 weeks later, we'd signed our first joint venture with the landowner, which is a multi-million pound joint venture. We have done our pre-app with the local authority, and it is supported. So that one will be going into private consultation phase over the coming weeks before public consultation phase. We're going to get some political backing on that because this is going to be Scotland's first energy positive, water neutrality, nutrient neutrality holiday park. So that's that one.
Is that the one? I'm not going to say that's the one we were looking at just over a year ago, wasn't it? Where a very famous American actor likes to go and play golf.
We've pitched over 1,000. We've pitched over 1,000 investors, venture capitalists, high net worth, angel investors, landowners, you name it. We've done over 1,000 of them. We've processed and onboarded roughly 57 independents and a venture capitalist, and just that dogged determination has basically brought these opportunities that are significant numbers. And you think we've managed to achieve this before we've even got in the sandbox and seen the adoption where ultimately the public will make this explode. And I think it validates things as well for society, because when people hear blockchain, real world assets and all these things, they immediately think crypto, they immediately think scams.
True.
So for us, we have a digital footprint of 6 years. We've been accelerated by 2 tier 1 banks, mentored by IBM and Village Capital, graduated Silicon Valley, venture capital backed, actual sites that are visible, that you can touch and feel, a working product. So we're hoping that offers a level of comfort for the adoption phase with society, because it's not something that's fresh out of the bag. And thank goodness the Bank of England and the FCA have made that pivot, because it's the final piece in the jigsaw.
Yeah. And it's a really good example again of what we were saying before about not existing in bubbles and working with what you've got in front of you and talking to people. And you might be on polar opposite sides of the spectrum in terms of what you're thinking, but you can have a win-win or a compromise where everyone feels like they've had that slice of the pie. And I think that is the only realistic way that we can progress forward with these types of ventures. Before I let you go, I'm going to ask you guys to share with me either a value, principle, or framework that you have found especially important in your journey, and do you find non-negotiable when it comes to creating the product that makes a real impact? and which you think will be helpful for other founders or investors in that impact space?
For me, there's two things. You've probably heard these before, but obviously I'll repeat them for the benefit of your listeners. The thing that is non-negotiable for me is everybody has to have the moral compass where we're here to leave the world better than we found it, even more so as a parent. If every generation can do that, surely we're onto a good thing. As for a tip for other people daring to even go into the startup rabbit hole, I use my military cap. You know, it's a staircase. You're on step number one. You can see the objective, which is the top step. But deal with the step that you're on. Do two things daily. Leverage your environment to get to the next step. That could be getting into an accelerator and networking that information to bring investment. It could be something as simple as that, leveraging your current environment. And also check every day what can kill you as a startup. You know, is it your burn rate? Is it the fact that you've got to be careful on your marketing because you might upset the regulators? So I kind of put my army cap on with my daily days at the coalface. You know, what can I leverage right now? We know all the jigsaw pieces, but you've got to do this one piece at a time. So yeah, that's my
Spoken
take.
like a true strategic CEO. Really powerful. Thank you, Gary.
Thank you.
Joey?
So for
this is a CEO's perspective now.
the hat that I wear is having been an entrepreneur all of my adult life and having exited a company before, done a lot of different things. And to me, it comes down to a moral compass, what we have lost in business. And when people think that they don't like capitalism, what they don't like is greed. It isn't capitalism. Capitalism is required. We have to make profits in business in order to survive. Capitalism is not a problem. Greed is a problem. And when greed takes precedent over doing the right thing, that's what everybody should have a problem with. And that's what we have in most of the corporate world today. So if we can do better, I feel and we feel that we have a responsibility to do so. You know, I started a side hustle of being a general contractor years ago, and I built with what's called structural insulated panels. It's OSB plywood on the outside and inside with polystyrene foam in the middle, and it builds these amazing houses. The problem was at the time, and this is the 99, 2000 era, it was 10 to 15% more to build that way. Well, people were unwilling to pay the extra cost. But we've gotten to a point now where the technology has come down in price. And so you can build at parity or below traditional build costs. So we feel we have a moral responsibility to do that. We can do better. We should do better. But, at the end of the day, hopefully we all want to be a better person tomorrow than we were today. And we want to leave something behind that people say, he or she did this and this was important to them. And
what I'm hearing from you is have a strategy that's underpinned by values, a moral compass, and then execute them with a clear vision and a clear idea of the reasons why you've put them in place. And what you said, Gary, I think is really important, which is just know what you're tackling, when and why, and check in with yourself and be flexible enough to cope with whatever comes across your table that you need to deal with, if it's a challenge, if it's an opportunity, etc. So, and I think this is very reflective of the journey that CurveBlock has been on since I've known you guys, and the name is all in it. So thank you so much. I'm really excited for the future.
Thank you. It's been a pleasure.
Thank you.